Hello everyone, it's Will Hassel once again for the weekly weekend look ahead, weekend review and look ahead. To start off this week, we're going to wrap up on the major averages. As we can see here across the board, the indices pretty much were flattish to not a whole lot of action going on except for Wednesday when we saw the banks, where some of the banks reported very good earnings, and that kind of lifted up the entire market. The indices were weak at the beginning due to a poor jobs report number from the previous week, and basically people being very confused on the mixed economic data that was released last week. I talked to me and Julian Marquise were texting the other day, and we were just talking about the markets, and we both agreed that right now people are just staring at each other. The bulls don't really have too much to be bullish about. The bearish don't have really too much to be bearish about. Because the economic data is so mixed that people don't really know what to do. So we get kind of these half-hearted moves, either to the upside or downside, unless there's some type of really conviction behind it. And that's what's going to be key to start looking for is, a clear point in economic data. The Dow Jones went and closed below all of its simple moving averages. Had a good start on Wednesday, but other than that, was pretty much flat. Same with the S&P, closed below all of its moving averages. And then the QQQ. The only reason why the QQQ was really up on Tuesday and was because of the big moves in Google and Tesla. I am long the QQQ. It did close below all of its moving averages, and we'll get into those stocks later on. Your economic data that's going to be happening this week. Now, keep in mind the markets will be closed on Monday because of Martin Luther King Day. But on Tuesday, the International Monetary Fund is expected to lift its 2014 economic growth forecast when it updates its World Economic Outlook report. And also the Bank of Japan will be holding a monetary policy meeting through Wednesday. The monetary policy for Japan is going to be big because it's the second largest monetary policy behind QE. A lot of people are watching Japan for the DXJ trade and for the short yen trade. We also have a slew of earnings this week, but on Thursday we also have jobless claims are to be released and our only economic data of the week, which is December existing home sales, which consensus says will be 4.93 million as opposed to last period of 4.9 million. And then December leading indicators, my apologies, and that's going to be consensus estimate of 0.2% versus last period of 0.8%. Earnings to look out for are Johnson & Johnson, Halliburton, IBM, and eBay, Netflix, and Starbucks are all going to be reporting this week. I'm going to start diving into my personal portfolio here. To start off with JP Morgan. Which reported pretty flat. Both turned to JP Morgan, which reported lower than expected earnings, but that was mainly due to litigations, so it's kind of overlooked, and people firmly believe in the good management of Mr. Jamie Dimon, which I do as well. It got lifted up on Wednesday due to several other banks' earnings close below all of its major simple moving averages. I think that with this last litigation, all the litigations will come to an end, and we'll see higher stock prices from here as we pull into 2014. I kind of like how they kind of reported mixed earnings, really, because it's kind of like, okay, this was last year was our mixed year of we kind of had some good performance, but it was set back by litigation. So 2014, we're planning on litigation free, and this is kind of how our year went. It went from, litigation's really impacting us to not really impacting us. So now we're getting to the point where it's no impact at all for this next year. No litigations as well. they're pretty much hoping for. AIG was brought down by the financial weakness this entire week. Saw some profit taking because it had been doing fairly well this past couple of weeks. When you look at it, it's been performing pretty well. Haven't gotten below 51 in 2 weeks. 51 is a key psychological level in AIG, as we can see here. Whole lot of major support there at 51, and then and then bounced off 51 again right there. So that's AIG. No real news has come out of it. They do report next month, though. I'm going to close off those two charts. Going into Starbucks and Michal Kors, which were the really volatile stocks in my portfolio this week. Starbucks, because people, as well as downgrades for both of them, and some upgrades for Michal Kors. Starbucks got downgraded because they see slowing momentum in the stores. But if you remember from last week, I mentioned the note that came up by the street about Howard Schultz's letter to all the store managers, and it basically said that they had the best year for their online traffic and gift cards that they've ever had. And Howard Schultz also said that a big theme for retail that he had been seeing, and this is a man who knows retail, says that he is seeing a whole lot more internet-based shopping this year. So Starbucks, that's why they had the slowing momentum in their stores. Now, Starbucks is reporting this next week on Thursday. They are expected to gain 69 cents per share. Starbucks on the chart closed above its 21-day moving average, but failed to get above its 50-day moving average. Really, Monday was its worst day. Had a little bit pop back. I've been seeing people saying they want to short Starbucks. The chart has been looking ugly. I will admit that. If we go even past then, it still looks pretty ugly. Monday was the real down day, mainly because of the downgrade. But I expect them to beat on earnings because they did have one of the best years for gift cards that they have ever had. And also, I think we're going to be seeing a huge, big boost in their gift card usage, like the mobile app that they have a partnership with Square with, the whole virtual wallet type thing. And I think that's really going to lead the way for Starbucks, and that's what you're really going to start seeing. Moving into Michal Kors, which had a pretty volatile week this week, along with, if we look at a 2-week chart, it's been really, really choppy, really, really kind of volatile. This past week, though, it got some upgrades, it got some downgrades, differentials, and price targets. But really, people have just been trying to bat this thing down off of basically no news coming out except for Friday, where we had really good channel checks. And I got criticized because I did buy some cores at $75, $75.02. My apologies. Because I only bought 2 shares. I got told, you're an idiot because your commission won't even do it. But it did lower my cost basis. My average price per share quite a bit. So I'm pretty happy about that. Really happy about that. But it had a pretty good day on Friday, but other than that, it's been really choppy. Earnings do come out next month, and they are expected to get 86 cents per share, but I think they're going to do more. I saw when I was in Hawaii and throughout my holiday shopping excursions, I saw a lot of people buying Michal Kors. Michal Kors shopping bags definitely outdid Coach shopping bags. So I think they're going to be on earnings. Then the big gainer that I saw on Friday, was Visa. Going to pull up my positions. As you can see here, it was up nearly 5% at 4.69%, or $10 a share. I only have 4 shares. I know it sounds like a baby, but it's about $1,000. It's less than $1,000 position. Gained 13% since, basically Thanksgiving, I think, is when I got into pulling up a 10-day chart here. As we can see here is a huge spike. We've been dealing with this kind of $23 resistance level that's been going in here, because that's where we retraced pretty much every time since the new 52-week high, 52-week high back down to this $23 resistance level. Once you break that, you basically make a new 52-week high, and it was a massive resistance level. That's the only explanation I really found for this big massive jump on Friday, was because we broke through that key $23 resistance level. And after it did, it just exploded. There was nothing but buy orders. That's the only thing that could really, it rose above all of its simple moving averages by a lot. I would not be surprised if we see this down 2% on Tuesday when trading begins again, because it was up such a big portion. I probably will take off half the position and then buy it back. Once it ends lower. I'm not entirely sure yet. I may just have a trailing stop on it the entire day, because it really was a real rapid rise for almost no good reason. It's been a nice little winner, for basically holding it for about 2 months, made 13%, not too bad. So yeah, I'm gonna go and start showing you some other stocks. Bank of America, all the major banks really reported this weekend. On Wednesday, he had pretty big earnings, mainly off of its Merrill Lynch wealth management side. GS, Goldman Sachs, reported a loss, but was still kind of uplifted on Wednesday with all the others. Then when it reported its loss, dropped down. And then the big surpriser was Morgan Stanley actually beat and had really good wealth management. As they said, really good wealth management side, and some of their M&A have started up again. So I actually really like Morgan Stanley here. I want it to go down a little bit more, but I think they're going to be a big winner this year. Citigroup actually posted lower than expected earnings, even though everyone had been ramping up Citigroup for quite a while now. If you look at the 2-week chart, you see it's been ramping up, and then a huge kind of down off of the expectations of that it was going to beat. Speaking of M&A, I would like to bring up this week's big talk, which was Google buying Nest. As we see, it kind of made it jump, and with that, the NASDAQ jump. They bought Nest, which is a thermostat and smoke detectors that communicate wirelessly with your smartphone. Basically, Google trying to integrate itself more into your home. They've bought a whole bunch of robotics companies lately. I love Google. I love Google. I wouldn't necessarily recommend buying the stock, because it is expensive, not from valuation aspect, but because it's $1,100 a share. I'd play this more through options, long out calls and such like that, rather than just buying the stock outright. But I do love Google. I think they're going to have a huge future. They can just continue more and more, and I think they should buy Fitbit, which is the maker of those little watches that keep track of all your fitness that you do, because I think it would be awesome that you walk into your room and the Fitbit tells you what your temperature is, communicates with your Nest thermostat, and it'll adjust your house to however how you feel, and what your preferred temperature is for whatever. Like if you just came back from working out and you enter a room, it's like, oh, you're hot, so you need to go cool. I think that would be a really cool thing for Google to do. And then another big talk this week was Tesla, off of its quote-unquote recall, not a recall, charger thing, where Elon Musk basically said, it's not a recall, and that just pretty much gave the stock a massive boost. I think it was like something up like 15%. not a huge fan of Tesla. I mean, I had traded it in the past. Do I think it's worth the evaluation that it's given? No, and no for a car company that only makes 20,000 cars a year. I don't think it should have this type of an evaluation. But then again, I don't decide the price of a stock. It really is still a momentum stock, and you're going to see a whole lot more momentum as we go on, because of this news has pretty much given it a leg up. It was kind of in a downward-ish spiral for a long time, just kind of trading choppily after its missed earnings that it had a while back. I wouldn't recommend buying the stock unless you're like a day trader or something like that, or like you can be really nimble on it. That's why I got out of Tesla as soon as this first fire started getting into it, because I knew I couldn't, sit down at my desk and trade it. I was at school, I had to do tight stop losses if I wanted to trade it. But if you are willing and able to go and do that type of nimble trading, always be watching it type thing, I say go ahead. And that's pretty much it for this week. I'd like to thank you all for joining me. Please continue to follow me on Twitter, or follow me if you haven't at WillHasselWS. You can email me whatever types of questions that you want at my email address. I always leave it in the comments. Please make sure to follow my fellow Leaders Investment Club members. Follow them on Twitter. Follow them on StockTwits. I'm also on StockTwits. I'm more than happy to answer any type of question, any type of comments. I love it when people ask me. I love it when people ask me questions. I had that going out through this entire week of like people asking me different things that I want to do. Even though I got a little bit of hate on the Kors thing, that's just what you get. And you tweet to me, I will tweet back. You email me, I'll email you back almost right away. If not, I may be in a class or something like that. But I'm more than willing to talk with you, answer any questions, whether it's about me, whether it's about trading, whether it's about leaders, whether it's about a leaders member, I will be willing to talk to you, answer questions about pretty much whatever. I do encourage you guys to become a member of leadersinvestmentclub.com. You can find some great content on our educational portals, all of our different articles, blogs, some really great minds that are coming, that are in Leaders. And you can catch all my videos on there. You can catch Ben Banks' videos, which are fantastic. They're kind of like mine. Mine are kind of like his, I like to say, because he's been doing it a whole lot longer than me. But he does a whole bunch of technical swing trading type setups, as I am a more long-term investing type. My typical holding is about 1 to 3 months. So he's kind of more short-term swing trading type thing. So if that interests you, go see that. But I once again would like to thank you for watching this and for following me on Twitter, StockTwits, and I will see you next.